Hey, the bearded investor, how you doing today?
Doing good, man. Doing good. How you doing?
Can't complain, can't complain. Happy Labor Day, happy Labor Day weekend, everybody.
Happy Labor Day weekend, y'all.
Happy investing, happy investing.
Absolutely.
So this is an investing for cowards show where we just teach cowards how to start investing in something, their lifestyle, or their soul, an asset, just any income producing asset, basically. So to pick stocks, do it equal financial education. Do you think the confidence in picking stocks equals financial education? So you have to work on your financial education in order to pick the asset that's in the stock market.
Yeah. I don't think they coincide because I mean, anybody can go in and just pick a stock, But it's the difference between if you do have financial education, you can kind of go into the balance sheets or go into like a mindset of, okay, if I were financially intelligent, how would I act? And then you can kind of, I guess, see like the macro scope of things and the
Right.
micro, but you can see more of the money functions when when you have financial education rather than you just go in and you just pick one.
So if I wanted to start today, would you bless me with the game to start with my financial education or just start picking some stocks? Just start picking. Like, and do I learn after I pick it, or do I base my education based off the results and do it that way?
I would definitely say get a little bit of financial education first because you first off you got to understand what kind of account you're getting into because you got your standard accounts, you got your retirement accounts, you got your different kinds of retirement accounts, and
Right.
then you have different terms in there like margin and things like that. So you really want to have a little bit of financial education before you start investing. Now you don't have to be like a certified investor level of financial education to start investing, but you do need a base knowledge, I believe, to actually know a little bit about what you're doing.
It's not like rocket science. So the language of investing is like the language of any other dialect that's out there. You can learn it. It's a beginner stage, and it's always stages to get you to the expert level. So I always tell people just start from where you at and never take financial education off your journey as an investor. Because once you stop educating yourself, what do you have as accountability?
Right. And also in investing, like you said, it's a language. So there's different lingo that goes with it. So like the PE ratio, people listen to that, that's like, what's that? And
Right.
there's like different measurements that we go by to evaluate, different stocks. So you definitely want a base of financial education. That way, when they throw price to expense ratio at you, you can at least kind of know what you talk. You can kind of know what they're saying.
Right. So I meet a lot of great investors who have a lot of experience, but they do not want to learn the basics of investing, just the language, just what everything means. So
Hmm.
you'll get a lot of people like, I don't want to learn the language. I don't want to learn what it means. It's like that's a fear based mentality. You want to learn every aspect of this game, especially what the definition of the different financial terms are.
Yeah. I would start there, and then get a little bit more in depth with like market cap. How that kind of dictates the size of the stock, not really the price. And honestly, that's where I would start, and then being able to classify like small cap, large cap, mid cap. That, and then after that, then I would go into like I guess like a PE ratio. You know what I'm saying? So you can kind of measure if they're how much of a value they are at that point in time.
So it seemed like you took your time with your financial education. I know with the internet, it moved at the speed of light. Financial terms, financial just results, financial news. It's just all over the place.
Yeah.
You have to really slow down and really kind of map out what you want to learn in this investment matrix, you know?
Yeah, yeah. I started on, just getting on YouTube, like how to start investing. Because when I started, I had absolutely no knowledge. So I needed to understand what a share was. I need to get an understanding of, okay, I'm buying a piece of a company. I had to get an understanding of value. Okay, when the stock goes down and my money go down, don't panic, reevaluate, and I can see if I need to put it somewhere else or if it's good there. It's just it's a lot, I would say. I was kind of going, I'd say too hard in the paint. Like I was missing out on sleep and stuff, trying to learn. But after I caught my groove, like the first year, it's really not that hard. And it honestly really didn't call for all that energy that I was putting into it. You know what I'm saying? Like just learning those basics and then having that knowledge of what to look for in companies. Like everybody's looking for the next Apple, everybody's looking for the next Microsoft. We got to break it down to the beginnings of Apple, the beginnings of Microsoft. What possibly made them stick. You'll find out that they were like leader in whatever they were doing. They were best of
Right.
the class. You know what I'm saying? So you have to kind of, I mean, it's as I said, it's a lot, but if you break it down week by week, you can get it easy. I was trying to do too much at once, and honestly, a lot of people probably would have got burnt out. But and I'd say I probably got burnt out for about a month, and then I got back to it, and then I got back to my basics, my ETF strategy. You know what I'm saying? Having that firm foundation, and then on top of that, I built my house on top of that.
That's what I love to hear. Man, just take your time, map out your investment journey. Don't let this world just confuse you about how to build your actual personal economy. It's possible, and you do not have to lose sleep just for financial education. You
Hmm.
it should just come naturally.
Yeah, and it's a lot of advice out there, like because when you get in stock market investing, like you hear about trends, you hear about this and that, you hear about this sector, the EV sector, you hear about the semiconductor sector, you hear about commodities, you hear about all these different things. So you're kind of going left, right to all these different strategies, but you got to hone it back in and realize that the basis of investing is to, one, be conservative with your money, and two, you don't want to lose money. So we have to dial that risk back in, and kind of laser focus where we want to go. Now
Right.
I'm still not the most laser focused. I have over 50 stocks that are in my portfolio, but nevertheless I have them separated. Like I have my value stocks, I have my growth stocks, and then I have my dividend stock. You know what I'm saying? And it's a lot of it is ETFs as well. So I honed it back in. I'm still not at the point where I could just go like, oh, I could just get 10 stocks in my portfolio. No, I'm not. I need more diversification, me personally.
Right. I think it's really developing your business IQ. Like for some reason, business just for studying the stock market. So you doing well-deserved research, and it's gonna pay off. The under
Appreciate it.
the under the radar stocks that you research and find that like the world is not talking about, and you invest
Hmm.
into, they will give you the results. They will give you the results. Like don't just don't stop.
Yeah,
Don't,
I got a few that I think that are under the radar, um, that I think could could be great money makers in the future. Now, these are on the more speculative side because they're under the radar. You know what I'm saying? On the radar would be more like Google, Facebook. Everybody knows those. But these would be like more, ones that are higher risk, as I'd say, but they're under the radar, such as Proterra, which is an EV company,
yeah.
but they do buses, and they're on the commercial vehicle side of things rather than the consumer vehicle side of things. So they're trying to sell they're trying to get into like tractors. They're trying to get in a whole bunch of different EV kinds of vehicles.
It's a
And
big
right
market.
now, Yeah. And right now they're doing buses, you know what I'm saying? And they're already in multiple different cities around the USA. So their product is already being used, you know, at a high capacity as well. So that's one that's under the radar. Um, let's see. Let's go way down in the depths. All right, so another one that's probably I'd say it's probably mid radar because it's kind of a well known company, but I don't think it's like people are buying it.
Uh-huh.
Um, Zoom. Zoom is a very catchy company because you know people talk about all these other companies doing video like Google Meets and all these other things, but Zoom has been in the game, and
Right.
also and
Still leading it.
also
Still leading it.
right, and also at one point, well, I think they're profitable right now. I have to go in and look and see, make sure I'm not telling tales.
Uh-huh.
But they're a well-oiled machine already. They're subscription based, which means they're going to keep money coming in. You know what I'm saying? And they're a very catchy company. Like people when people get Zoom, it's hard to deviate from it because of how great it is. You know what I'm saying? So Zoom is another one. And as for a third one, I would say well, people already know about Uber and Lemonade. Let's see, Life Cycle. All right, so this is piggybacking on the EV side. So Life Cycle is one of those companies that they're trying to solve a problem. All right, we're gonna have a problem when we're trying to get rid of all these batteries. So Life Cycle comes into play because they're trying to recycle all these lithium batteries and make new ones out of them. So they're kind of there to mitigate a problem that could come up. And I like companies like that because, you know, as we talk about the EV sector, it's going to be, you know, they're going to start producing progressively. So when we talk about recycling them, the recycling side also has to progress as well because they're naturally mitigating that problem. So the EVs get old, they come to them, they recycle and make new ones. And as you know, naturally, are, as relevant businesses are around, they grow. You know, so I feel like they're positioned for some potential growth in the future. Now, these are three under the radars. These are not the ones that I have the most of my money in. These are
Right.
not the ones that are low risk. These are high risk ones. But nevertheless, these are three under the radar stocks that I do truly believe in.
That's great. Personally, picking stocks is an endeavor that takes practice, takes patience, and takes preparation. So I always remember the three PPP: practice,
Mm-hmm.
patience, and preparation when you're picking stocks.
Yeah, yeah.
So you want to always try to only invest with a clear idea of your goals, of your budget, and have a plan. Do you agree with that? Like always invest with a clear idea of your goals, like in the back of your
Yeah.
mind.
Yeah, I agree. And that kind of coincides with the first subject of the financial education. Because like I knew going into M1 Finance that eventually I would want to use margin. So I went and got a standard account. I also have a retirement account as well, you know, a Roth IRA,
Right, right,
but I wanted to be able to leverage my money for less of a percentage than, let's say, a credit card or, you know, use money that won't show up on my credit report at all, you know. So I had to have that basis of financial education and know, okay, this is what a stock account is, a standard one is, this is what a retirement one is, this is what margin is, and just getting familiar with those types of vocabulary to where I'm able to go in and try to plan and execute my goal of retirement in 20 to 30 years, you know what I'm saying? And not having to rely on anything else but the money that I put in. If I have like pension money and I got a match and all this other stuff, that's great. I'd love it. But I want to
right.
be able to retire on my money, you know what I'm saying, on my time.
Likewise, likewise. I always use my goals as ammunition. So anytime I'm shooting my gun at a target, it's my goals or the bullet.
Mm-hmm. Mm-hmm.
So if the bullet don't reach the target, how do I ever reach my goals?
Exactly. And those different, and also with that, when you're talking about guns, you got different guns that reach different depths. You know what I'm saying?
Exactly.
So you got to prepare yourself, for the different distances. You know what I'm saying?
I believe you can have it's weaponized. Like the market is like it's different weapons. So you can use a 9 millimeter, you can use an AR-15, you can use a shield. You
Yeah.
just gotta know how to use like the different weapons that's in the market. It's for you.
Yeah, absolutely. Like you have people that, I'm a long-term trader, but you have people that, well, not trader, I'm a long-term investor, but you got people in there that are long-term traders, short-term traders, swing traders, momentum traders, you know what I'm saying? They all got different guns and they all know where to hit. You know what I'm saying? But you just got to know what your strategy is and stick with it and have the fortitude, the mental fortitude to go with it.
I love
But
that.
don't be out there with 100% in high risk stocks, y'all. Go out there and get some ETFs. Go out there and get your Microsoft. Go out there and get some companies that's going to be around for a while.
Build your
You know,
foundation. Build your foundation because without great foundations, you're gonna have access to losing everything. You don't want to lose everything because you didn't build your foundation. That's the
exactly.
basics of personal finances. It's just getting your foundation under control. Investing is
Absolutely.
investing is extra. So it's like the icing on the financial cake is the investing. So
hmm
have
Yeah,
you
yeah.
ever
So sorry, I'm back on the Zoom comment because I'm checking them out. So they are positive. Their revenue is increasing drastically. So in 2020, they had a total revenue of 622,000, and then last year at the end of January, they had a total revenue of 2 billion, and then now this year they're projected at 4 billion, and they're already on pace at 4.295 billion. So they're growing and growing still, but the
right?
the stock price has plummeted. So that's what I like to see. Companies that are still growing, but the stock price is going down and down and down, and they had a nice PE ratio. That way, I
Let
can
me,
rely on a ride up later.
right. Let me ask you about Netflix. Oh my God, Netflix down 60%. Netflix lost 1.2 million subscribers so far in 2022. Do you think
And it's
Netflix best days are over?
uh, if if my eyes are serving me correctly, I mean, it looks like they're still growing. 15 bill, 20 bill, 24 bill, 29 bill, 31 bill. So I mean, hey, if I was if I believed in Netflix, now I like Disney Plus because I mean they're doing some amazing things. I like
Definitely.
Disney as a company, period. But
Yeah,
and they,
same.
and they they got a huge moat. You know what I'm saying? They're not just in the streaming game. They got the amusement parks. They got other stuff going on. But
Right.
if I was definitely like believing in Netflix and I looked at this revenue increasing, I looked at the gross profit that's increasing. Um, let's go to this balance sheet. Their assets are increasing. I mean, yeah, I'd buy Netflix. If I believe in Netflix, absolutely.
I always buy quality assets when the market is down.
Right.
If
And
you're,
Netflix is a sticky brand. They're not going anywhere.
what's the next Netflix? What's the next streaming service that will put Netflix out of business? I think we are far from that.
Yeah, yeah. I mean, if we're talking hypotheticals, um, I as far as the big dog in the streaming company, I'd say Disney, honestly, because Disney got their movies already that
Right.
generations upon generations already love and know. They're coming out with the remakes. They got their own shows coming out. They own Marvel. They do the ESPN thing, and
And you
I think
heard,
Hulu too is owned by Disney. So I mean,
right, right.
I I think it's Disney. I mean, and then if you compare Disney and Hulu, I mean, you probably already got something that's bigger than Netflix.
Netflix, it'll have to be a buyout play. So like an Apple would have to buy Netflix. So a company like Apple or a company with like Amazon would have to buy like the Netflix and add it to their platform.
Yeah, and I would much rather like a company like Amazon buy it than what was the other company you said?
Apple.
Apple. Yeah, yeah, because Amazon's already in that field. You know what I'm saying? And you add Netflix to it, it's like a double powerhouse, kind of like Disney and Hulu. You know what I'm saying? So that's a real competitor. That's a heavyweight right there. Heavyweight championship match.
You got some favorite sources for information, like Market Watch, like Yahoo Finance, like Bloomberg.
Yeah, absolutely. So right now, what I'm looking the stocks on up as far as numbers go is Yahoo Finance. That's my go-to as far as numbers and stuff. But if I'm going on like let's say just articles, you know, I look at like Seeking Alpha, Forbes, Motley Fool sometime. You know, they be taking sides for their stocks. I don't like that. I like the middleman. Not, you got the bear case and the bull case, but sometimes Motley Fool. Yeah, I think I used to watch. There's this one that Jeremy from Financial Education came out with that I used to use. It's no longer in service, but I used to use them sometime too. So it's just a variety of services. Google, I'll get on Google and just look up a topic. So just a variety of services. But the one that I trust the most would probably be like Seeking Alpha. They do a good job of staying in the middle. I don't know much about the other ones. I think there's like Investor Watch. And then there's some other ones that'll probably be useful, but I'm a big Seeking Alpha guy. Seeking Alpha and Forbes.
What's crazy? It's so many tools and resources on the market for the average investor. Nobody should have any problems in any market. It shouldn't be any problems.
Yeah, absolutely. Even if you're talking about like outside of like the business stock market, like if we're talking about Forex, you got those guiding government bodies behind those currencies that'll actually come in and evoke different policies that'll guide those those different policies that'll guide those currencies. So if you know like macroeconomics, you can look at a law or a tax and realize that dollar is gonna either go down or go up or whatever the policy is, and you can bet it against the other dollar that you think is not gonna do that.
A strong dollar mean what does a strong U.S. dollars mean for businesses and investors?
Oh, a strong U.S. dollar, I feel like means stability, and that's for everybody, for businesses and everybody, investors alike, and regular folks alike as well. Because even the regular folks that's out there, scraping for 7.25 an hour, God bless their hearts. They don't want to see their money decreasing, as far as value. So I think it means stability for everybody involved.
What's crazy? The value of the dollar keep breaking new records. It's showing no sign of cooling off. The U.S. dollar is at its strongest it's been in decades. A strong dollar will likely impact the earnings of many publicly traded companies such as Microsoft, IBM, Nike, Johnson & Johnson. Mm-hmm. So yeah, just a strong U.S. dollar is breaking new records. So as investors and business owners, always remember where your U.S. dollar is at, the value of the U.S. dollar as well.
Yep. Let's see. Let me click on this 5 years. Yeah. So you're absolutely right. Hit that max. Oh, this is the one. Oh, this is a comparison to the euro. Sorry, but yeah, it looks like the dollar is definitely relatively strong, especially since it's looking like we ain't been this high right now since 02, like July-ish of 02. So yeah, it's at the highest it's been in 20 years.
So with that, like when you see stuff like that, make sure you and your family protected with adequate insurance coverage. You should think about investment time horizon, your risk appetite before you take any steps to grow your money. You should be ask yourself, what are your financial goals? Do you need your savings for short-term goals, or just remember your long-term retirement goals? Focus on what you can control. The returns on your investment may depend on many factors, but what are in your control, you focus on. You cannot control the amount of risk that you're not comfortable taking. So always control that first. Control the amount of risk that you are comfortable with taking in the market.
Hmm. Yep. And also with the way inflation is, the way inflation goes, so it might be at the same value as O2, but it says at $100 from O2 to 2022, it says the dollar value will be 50%, well, roughly 50% more, approximately. So even though that value of the dollar is still there, that inflation pushes it up higher. You know what I'm saying? So it's at a better place than it ever has been.
Thank you, Robert, for today and your time and your mindset and your research. You've been a great member of this
Oh,
channel. I want to leave off with this.
appreciate
Have
you.
you ever calculated your personal inflation rate? So, we're in the month of September now. So your expenses you spend in September compared to your last year expenses in September.
No, I'm very frugal, so I try not to spend extra money. But that's probably something that should be tracked. Just to see if I'm spending extra money places that I could have probably spent it better somewhere else. My opportunity cost would be better. Um, but yeah, that's not something that I usually do because I try to spend the least amount possible.
So like with my clients, I try to calculate their personal expenses basically month to month to see their type of lifestyle, like where they spending their money. Their money
Yeah,
at least for the last 3 years. So it can be like in 2021 September, I look at that month. In 2020, I look at the month and see like the expenses, everything you buying your money, everything you buying. So it show a lot when you actually calculate it, because
yeah,
going
yeah,
forward, like next September, like exactly what you can afford to lose.
yeah. And it also shows habits, like, I'm saying habits that you might need to change.
That's the only way you get your financial habits under control. You really got to calculate everything expense wise that you spending your money.
Yeah, yeah.
In the world of consumption, soaring living costs, and student loan debt, most people find it difficult to invest for their future because they're struggling to afford for the present.
Hmm.
So, in a
Yeah,
world of
I
so
agree.
much consumption, soaring living costs, too much student debt, most people are finding it difficult to invest for the future because they're struggling to afford the present.
Hmm.
So once you learn how to afford the present, investing will never be difficult.
Right. And even if you invest a little bit, whatever that candy bar that you was gonna buy today, don't buy it today. Put it in the Robinhood, or put it in a M1 Finance, or put it in Fidelity. You know, just little habits like that as well will help. Because I know a lot of people say they don't got no extra money, but they find extra money some kind of way to get whatever. It's just the fact of having that delayed gratification versus that instant gratification. And I'm not saying now just go full out on delayed gratification, because sometimes you need that instant gratification to keep going on, sure that it levels out.
So next week we're gonna talk about time in the stock market. We're gonna see, does time in the stock market ever works? So next week we're gonna just talk about just stock market timing and just do and why is time in the stock market a bad idea? So some day traders, they study past market data and try to identify trends with particular stocks and asset classes, and other make forecasts based on company success. So it'll be a great debate to see, like, does timing actually work in the stock market? The amount of time that you have to keep your dollars
Mhm.
invested in the market, do it work?
I'm gonna save it for next week.
Thank you, Robert. Thank you, Robert. Any last words
All
before we
right, man.
wrap up?
No, man. Thank you for having me on the show again, as always.
Anybody you want to show some love to in the world?
Hey, if you're watching this show, get in the stock market. It's not hard.
It's not hard.
Uh, Start off with an S&P 500 ETF, like a VOO or SPDR, VOO or SPDR. Put your money in there. It's gonna average. It's gonna do what the S&P does, and then from there, build your knowledge.
While you grow your wealth, build your knowledge. They go hand in hand. Happy investing,
Mm-hmm.
Robert. Happy
Absolutely.
investing. Thank you for today. You have a
Happy
blessed one.
investing, man. You too.
All right, I'll see you next week.
Yes, sir.
All right.